Okay, so we are back. Last video was explaining how to set up your trading view, what candlesticks are, what time frames you should be on. I didn't mention this. We should probably talk about like two good indicators you could probably use. But we're gonna mainly go over fair value gaps, right? So what is a fair value gap? We have an FVG, which is your fair value gaps. And we also have your IFVGs, which are inverse fair value gaps. Done. That's really it. There's nothing more to this. Now, what is a fair value gap? You see a really long extended candle right here, right? So price kind of had a moment where it had a breakout, so to say, and it's an unmitigated zone of price action, right? So that imbalance of price, because it just shoots straight up, usually the imbalance gets filled out because there's still orders that are placed at those imbalances. So typically we fill those gaps. And how do you know where this gap is? How do you draw this gap? How do you know if it's a valid gap? How do you know, like, all of these questions that you may have? So for one, luckily, there's an indicator that actually draws them for you. You don't even have to draw them or know how to draw them. But by the end of this, you'll see them and be like, I can just see that in my head. Like, oh, there's one right there, there's one right there, there's one right there. And you won't even need the indicator. But the indicator is good to basically kind of test your knowledge. You turn it off and then try to draw it on your own, and then turn on the indicator and be like, yeah, I'm learning this. I'm confident with drawing my own fair value gaps or inverse fair value gaps. So I'm okay with turning off the indicator now and just understanding that I'm learning, right? So how do you draw a fair value gap? So we see a big displacement candle to the upside, right? You're going to take the candle to its left and the candle to its right. You're going to grab a box. So you're going to go to your brushes, go to rectangles. And if you're on Windows, hold Control, right? So this is going to snap to the top wicks or bottom wicks or candle close or open of the candles instead of just like free forming it, right? So hold Control. You're going to go from the top wick of the candle on the left to the bottom wick of the candle on the right, right? So there's your box. There's the imbalance of price. So now what would I use off of this? If I was strictly just trading this, right? There's an imbalance here. So I'm just going to label this as my fair value gap. I have these already kind of drawn out. So as a template, so this is a fair value gap. There's a displacement here in between this big candle. There's probably another one here somewhere. Technically here. I want to find a bearish one just so I can kind of show you guys what a bearish one would look like. Probably beginning it today. I mean, there's pretty nice examples. Okay, this is a perfect example right here. So this one actually holds. So it's the opposite for bullish, or for bearish, sorry. So for the bullish one, we were doing the left top wick to the right bottom wick. Now we're doing the left bottom wick to the right top wick. Just the complete opposite. So right here, going to this one, boom, done. Right? So it's this wick to this wick. So big displacement, look to the left, look to the right, draw to the top, draw to the bottom, and then extend this out. And you can actually see that this one specifically actually played out. This honestly for me is low-key an A+ setup trade. Now why? We have imbalances lower. So these are previous fair value gaps made way before this trade, right? So they're very external gaps that want to get filled. I'll explain more in depth of what that means in a second, but let's stick to the fair value gaps. So we see a fair value gap, right? And if we're strictly just trading off the fair value gap, for me personally, I take the entry off of the CE. What is the CE? This dotted line right here at this rectangle is the 50% point of the rectangle. So what mine would look like personally, if I was trying to take shorts off of a bearish fair value gap, I would put my order here once we confirm, right? Maybe to the tops of this candle. So that's a 16-point stop. I'd be targeting lows. So boom, that's be my trade. And we actually see this has like 2 points to draw it on, maybe a couple points to draw it on. It's like $100 loss for about. I mean, that's a huge profit goal. That's like over two G's. But anyways, the the point of this is we see confirmation that we wick into our imbalance of price, right? So this entire zone is our imbalance of price. We started closing here, which could look pretty scary if we get a close above. If we close above a bearish fair value gap, it becomes an inverse fair value gap. So what does that mean? Let's say price closes here. Let's say you see how this white candle right here is closing in the green. If we have a candle that's white and it has a white box like this above the fair value point, right? So like let's say this is our candle and we see closure right here, that's bad, right? That means like this price imbalance is not holding, meaning this becomes a new support zone. I will show more in depth of the IFVG, but that would be an inversion of the fair value gap that was just created, right? But we see that we have an obvious respected fair value gap. So honestly, instead of taking it off the CE, maybe you wait for the candle confirmation. We wick into this imbalance and we close here. Maybe I enter the trade here. I do a 15-point stop, or maybe I put it at the high of this candle, right? Because if I know that if price comes back up to this point to retest this top, it's probably just going to close above at that point, right? I mean, could it just dump right back down and wick you out? Sure. This would be a prime example of me just, so 23-point stop. And if you have a certain like RR, whatever you're going for risk to reward, for me personally, you would just target the lows. That's pretty much everything that you would do when it comes to like a continuation play. I'll explain continuation here in a second as well. You're just targeting lows, and you can see that it obviously just bangs out. I mean, like it took a little bit of time. We retraced a little bit, but in the end, we still had our profit goal, right? So I'm pretty sure PJ caught this trade this morning. I'll link his channel below too. He's actually a really good trader. Highly recommend you watch his videos. Completely legit. He's a great explanation when it comes to some of this stuff. Okay. So, yeah. Inverse fair value gap. Let me see if I could find one before I just like try to explain it. It's definitely easier to show than it is to do. I guess there's probably something here. So it gets a little choppy. This is why I strictly don't trade fair value gaps off the 1 minute chart. I'll probably have to scale out to a 5 minute chart just because the data is a little bit stronger, right? So we see these are technically IFVGs, but I mean price is just chopping all around because it's New York. I don't want to show you a bad model because then I also don't want to show you a really big fair value gap because it just doesn't really help. Maybe there's something here that I'm missing. I think there was something I took this trade off of. Yeah, okay, I can see it. I mean, it's very small. Actually, yeah, we'll sum this one. Okay, so fair value gap right here. This is a bearish one. We get candle closure above, right? So this is what I was talking about. We see the white box come above here, and it closes here, showing that confirmation of we want higher, right? So what happens when we tap back into the zone? Yes, we confirm. After we wick down, we do not close below. This is the main point. It can wick down all it wants. If the price does not finish below that box, below the fair value gap, the unmitigated zone, technically the fair value gap is still holding. So from here, this is technically still holding. We still come down here. We still close up here. That's showing signs of bullish momentum, right? So I actually base this trade off of a 1 minute continuation. I remember this one now, just slightly briefly. If I go down to the 1 minute, let me see if I can just go try to find this for you guys. It's very far. Oops. Very far. I think this is it. So boom. We see the inverse here. And then once we inverse that price or that gap, what happens when we tap back into this gap, right? So we close above, we come back down. It almost acts as like resistance, right? So it's holding the price up now instead of holding it down. So now we see a continuation model coming out of this. So continuation, what do I mean by that? if you've ever seen a very basic picture of stocks where it's like this is a continuation. It's going up, there's a repull, it's going up, there's a repull, it's going up. So the idea is you're looking for either that or you're looking for this, whatever your structure is. Very basic continuation. So what do I see here? We see candle closure coming above. So see this, see this, see this, right? Continuation. Very, very simple. So now that clarifies fair value gaps and inverse fair value gaps, there's an indicator you can use. Let's see what it's called. I think it's Lux Algo Fair. Yeah, right here. So use this one. So what happens when I turn this on? Boom. Marks them all out for you. It'll even color code them. So blue is bullish, black is for bearish, and you don't have to understand how to draw any of these. So I would highly recommend this one. You go to indicators, type in fair value gap, and look for the one that says Lux Algo with 22K at the time. It's probably got more when you watch this video. And then rejection blocks is also good. I have, let's see which one I have. What do I have? Those are the ones I'm trying to make right now and work on. This is one called. We're going to look for rejection blocks by taking profits. So, rejection blocks right here. Rejection blocks by taking profits. That will show your rejection blocks. I need you to add those two to your charts. That is your main goal of this video. It is to set up 2 indicators on your free chart. So that should be good for video 1. 2 indicators explained at fair value gaps and inverse fair value gaps and explain. Sorry. What else could I break down? No, we'll keep it short. Keep it short. We'll try to just do this in like little sections so people can find them. All right. Fair value gaps and inverse fair value gaps.